everyone. Welcome to today's panel discussion. We are here today to have an honest conversation today because if you have spent any time inside a bank or a financial institution in the last 2 years, you know that the gap that exists between how AI is being talked about at the leadership level and what's actually happening on the ground. Now, that gap is real, it's significant, and it is what today's session is really about. So, our topic today from AI ambition to banking execution and what it really takes in 2026 is deliberately framed that way. Now, ambition is easy, but execution is where it gets really complicated. And I think the two gentlemen joining me today are going to bring some real clarity into the distinction. So I am Divya Baranawal, Vice President and Principal Analyst at QKS Group. I will be your moderator and host. I am joined by my colleague Anandh Ramaswamy. He is Practice Director at QKS Group, who brings extensive experience from the banking world. Today, we will make sure this conversation covers the ground it needs to. Now, let me introduce today's panelists. So, we have a very interesting mix today. We have Sridhar, who has over 3 decades of experience across banking operations, treasury, payments, and core banking systems. He has held leadership tenures at banks like Indian Bank, ABN AMRO, Wipro, and TCS. Hi, Sridhar. Welcome to today's panel discussion.
Thanks. Thanks for inviting me.
Then we have Sheshadri. Now, Sheshadri is an AI and automation leader with 15 years of experience in BFSI transformations. Now, he currently leads the Copilot Center of Excellence at Mashreq Bank in Dubai, where he heads AI adoption and agentic AI implementation across the enterprise. Hi, Sheshadri.
Hello, hi. Thanks for having me.
So, a wonderful thank you, both of you, for being here. And let's get straight into today's discussion. So, this is just to set up a context for the audience. Over the last year, what we have seen extensively is that AI in banking has moved very rapidly from experimentation to enterprise priority. But while we see that the ambition is huge amongst banks, the reality is also incredibly complex. So, what we see is banks today are balancing innovation with governance, speed with trust, and AI transformation with deeply embedded legacy ecosystems. So, today, what we want to do is move beyond the hype cycle and talk about what it actually takes to operationalize AI at scale. Now, whether be it data, governance, operating models, decision making, customer impact. So, we'll try to include all of that in today's conversation. So, before we get into the deep dives, I will just have a quick round of I'll say, a warm up session. And I would want to have, your perspective. So, my first question for you, Shishadri, is, what has surprised you the most about AI journey in the last 12 months?
Okay, 12 months was very quick. I've been most surprised by how quickly AI has moved from experimentation to executive priority, right? 12 months ago, most conversations were about pilots, MVPs, we'll try something and stuff like that. Today, the real discussion is about scale, governance, measurable value, how to embed AI safety into core banking workflows. So the shift is no longer about whether AI matters, but how responsibly and fast we can industrialize it. So this is the transition that happened over the last 12 months.
Wonderful, wonderful. Thanks for your thought. So, what you're saying essentially that AI is no longer sitting inside innovation labs, it is also becoming a boardroom conversation. So, quick shifts in terms of AI that you have seen. Wonderful. So, next question would be to Sridhar. So, Sridhar, from your perspective on banking operations, has your view been similar or different?
I think this is a discussion that has been happening for decades. We all this is a pain point that has been there in the banking industry for quite a while now. But that biggest, but the internal fragmentation. Let me possibly try to explain it a little bit deeper. We have all worked in banking environments where over the years, institutions build themselves layer by layer. It can be because of a stack for treasury, one for lending, another one for payments, another one for, let us say, customer servicing. And most importantly, a lot of acquisitions happened between the banks. And to manage all these things, they were always having workarounds, various manual bridges in between, etc. But when the banks began their AI journey, they often discovered one very uncomfortable truth. They do not have one single integrated bank. They will be having multiple mini banks coexisting inside one organization. But for AI, it depends more on a clean data which is more contextual, which could be trustworthy and increasingly real time. But legacy environments in banks are usually fragmented on all the four of them, which I just mentioned. Customer definitions vary by function, product structures vary. Even data ownership is not very clear in the banking environment. Data quality is sometimes inconsistent. In some cases, the same customer may be existing in multiple systems with multiple identities and multiple service histories. This is not something new which I am telling now, but AI cannot remove that problem. But what AI will do, it will expose you faster on that. And another bottleneck is on the organization itself. Enterprise AI does not sit neatly inside a technology. It requires business, operations, risk, compliance, audit, legal, and data teams to work in a far more integrated way than a traditional banking structure that were designed. In my own banking years, whether in treasury operations or in global processing environments, functions were often, I would say, optimized vertically. But AI scaling requires some kind of a deeper horizontal collaboration. This is not always, I don't think it's a natural strength of many of the banks. Another important bottleneck is trust, I would say. In a regulated institution, you cannot use AI casually in areas like credit or AML or treasury risk collections. We can keep saying many of the sensitive areas you cannot just like that use AI casually. The moment you move from some kind of a productivity use cases to where you have to make some kind of a decisions based on a consequence, then the questions will start arising around things like, I would say, explainability, ownership, bias, and most importantly, audit trail. That's the most critical point in the whole discussion we have. So if I have to summarize, AI scaling in the banks can fail not because banks are lacking models, but banks, if suppose because banks underestimate the amount of data, process, and governance simplification required before AI can truly operate at enterprise scale. So I would say that the banks that will do well are not just the ones who are buying smarter AI, but the ones who are cleaning up their internal in architecture in a more diligent way. Those who can clarify data ownership and can create cross-functional decision structures. I think so. Yeah.
Wonderful. So, Anand, your final thoughts on that one.
See, I would go with both of them, Divya. I really feel, um, what Sridhar was telling was right. It has really evolved a lot, and like what Sheshadri was telling, in the last 12 months, the way how people have started using AI, I could really see in different places that too, especially in the BFSI segment. Um, Banks have started using Gen AI for all fraud related items, for all payment related, for all kinds of integrating core banking system with digital banking systems. Those days have gone now where people really get into the bank and start working. It's all the neo bank concept where everything is AI driven. So I would really go. This is what in the 12 months that AI has really moved into the banking and into the BFSA segment, and I would really go with both of them what they have been talking about.
Wonderful. So I would agree with you, gentlemen, and I also believe that the gap that is there between customer expectations and the readiness that banks have is actually one of the biggest transformation pressure that banks are having. So last one on this is to you, Shashadri. So, because you're leading the COE initiative, so if you had unlimited budget for one AI initiative tomorrow, where would you invest first?
Okay. So on this, I would echo Sridhar sir what he told in the previous question. So if I had an unlimited budget, I would first invest in a trusted enterprise AI foundation, which is data quality, lineage, orchestration, governance, and reusable AI services, right? So in banking, sustainable AI advantage does not come from a single model, right? It comes from building a secure and scalable platform that allows multiple high value use cases to move into production with confidence and trust, right? So this would be my priority if I have an unlimited budget, basically to build the foundation of AI.
So, very good thought, and I think our listeners and viewers should stick to that one because we believe that one of the biggest transformation work is not the model itself; it is the ecosystem around it. So, I would want the viewers to stay with this thought. While we move into the next section, in which I'll try to dig up a little bit more about scaling and enterprise transformation because that is essentially what we are talking about today. So, ambition is definitely one thing, but scaling AI inside large banks is where reality really kicks in. So, Sridhar, my question to you is, many banks still operate across fragmented legacy systems. There is siloed data. So, in your experience, what have you seen become the biggest bottleneck when scaling AI enterprise wide?
Okay. The word fragmented legacy system, I think the banks have been talking it for ages, probably for many decades. And I'm hoping they are not going to discuss it anymore after possibly the next 5 to 10 years. In my experience, the biggest bottleneck is not AI technology itself. Banks will usually find a way to procure models, platforms, or tools. Real bottleneck is internal fragmentation. I have worked in many banking environments where over the years institutions built themselves layer by layer, one for treasury, another for lending, another for payments, another for customer servicing, and furthermore layers through acquisition also when banks merge and acquire each other. And then several manual bridges in between they were trying to bring in. So when the banks begin their AI journey, they often discover a very uncomfortable truth. They do not really have one integrated bank. They have many, I would say, mini banks coexisting inside one organization. AI depends, we all know, on clean data, contextual data, trusted data, and increasingly real-time data as well. But legacy environments are usually fragmented, as we all know, in all four aspects. Customer definitions vary by function, product structures vary, data ownership is still unclear, data quality is inconsistent. In some cases, the same customer data will be existing in multiple systems with multiple identities and multiple service histories as well. AI cannot or does not remove that problem. It exposes it faster actually. The second bottleneck is organizational as well. Enterprise AI does not sit neatly inside technology. It requires business, operations, risk, compliance, audit, legal, and data teams to work in a far more integrated way than traditional banking structures were originally designed for, I would say. In my own banking years, whether in treasury operations or in global processing environments, functions are always optimized vertically. AI scaling requires horizontal collaboration, I would say. That is not always a natural strength in banks. The other most important bottleneck is trust. In a regulated institution, you cannot use AI casually in areas like credit, AML, treasury risk, collections, or anything suitable for customer service. The moment you move from productivity use cases to consequential decisions, questions arise around explainability, ownership, bias, and most importantly, audit trail. So, if I have to summarize the biggest bottleneck, AI scaling fails not because banks lack models, but because banks underestimate the amount of data, process, and governance simplification required before AI can truly operate at enterprise scale. That is all.
Wonderful, wonderful. I think that's wonderfully put together, Sridhar. So, Shishadi, next question to you, because you're part of the transformation currently. So, what do you think changed organizationally at Mashreq to move from experimentation into production grade AI adoption?
One good topic, one good point which Sridhar sir mentioned was AI has to be a horizontal, which cut across all the verticals in the bank, right? That was the first organizational change that we did, right? So we built an AI COE, which was a horizontal. And what changed organizationally is that AI moved from isolated innovation into a governed enterprise program, right? So to scale AI in production, you need executive sponsorship, clear ownership, strong cross-functional collaboration, a defined governance model, reusable platforms, a disciplined prioritization framework where you bring in impact, value, risk all together and make a priority of the use cases. And the operation model, matters as much as the technology, right? So this is what we have seen and we have done in our world as well.
Wonderful. So wonderfully put together. So what is important to note here is that AI readiness would require changes across culture, governance, workflows, and decision-making structures. And also, you have highlighted that scaling AI successfully would require more cross-functional alignment, right? So that's interestingly put together. Totally agree on that one. Now, next question would be to you, Sridhar, because banks today speak a lot about AI, but the way we see is that boards increasingly expect measurable business outcomes. So, what our attendees today would want to know is what are the KPIs or success matrix that are actually convincing leadership to continue to invest?
This is a very important question in the industry today, actually. Leaderships today is no longer convinced by the AI pilots alone, I would say. The conversations are moved from, are we doing AI? Because we are already doing AI, to, is AI creating some kind of a measurable business value? From what I have seen, the most convincing metrics usually comes possibly in, I would say, some three layers. The first layer, the most important one, is operational efficiency. This is where any leadership or board gets the earliest comfort because the numbers would be quite visible. Turnaround time reduction, manual effort reduction, better productivity, faster customer servicing, improved exception handling, lower rework, fewer errors. These are all the standard things which any leadership would look into when it comes to operational efficiency. We all know that. In a bank, if a process that earlier took 2 days can now be completed in 2 hours with better consistency, that's where the management is always going to see a value. And coming from an operations heavy environment, I would always say that where AI usually earns its first credibility is on these parameters. Then the second one is the customer and commercial impact. This is where AI becomes more, I would say, it becomes more interesting. If AI improves onboarding conversion, reduces churn, enhances relationship managers' productivity, improves cross-selling quality, and most importantly, if it can deepen the wallet share, then it moves from being a technology initiative to some kind of a growth lever. Leadership becomes much more serious when AI starts influencing, let us say, revenue quality, not just cost reduction alone. And third layer is the most important thing on risk and control value. In banking, even if one major incident can destroy the benefit of many of the efficiency gains, we have seen that. So when AI helps reduce fraud losses or improve AML surveillance or detect anomalies earlier, or even improve complaints monitoring, leadership will start seeing strategic value over there. I would actually say that in many banking boards, protection value is sometimes more credible than or more important than or it would even persuade the boards than the productivity value. But personally, I think there is one KPI that sits above all these, I would say. As AI improved, what is important is as AI improved decision quality. Because Banking at its core is a decision-making process. We all know that. Whether it's a credit decision or a treasury decisions, a fraud decision, decisions on compliance, or even decisions related to a customer. If AI simply makes bad decisions faster, for example, that is not transformation. However, if it helps institutions to make a better, more contextual, and more responsible decisions, that is where the long-term value lies. So the boards as well as the institutions will continue to invest meaningfully in AI, not counting just the number of use cases, but the ones which will be able to show that AI has improved efficiency, influenced growth, strengthened controls, and above all, improved decision quality without creating unmanaged risk.
Wonderful. So, totally agreeing on that one. And just summarizing that definitely measurable outcomes are becoming more and more critical to convince the board, and it could be across the increasing your customer experience, improving your operational operations, or the decision quality. So that's exactly where we also see
As well
most
as
of
the
the
risk and
discussions,
control value.
as well as the risk and control. Absolutely, absolutely spot on, Sridhar. So now we have an interesting
Yeah.
set of questions on data modernization and AI readiness, and I will pass it on to Anand to take that ahead.
Thank you, Divya. Uh, this is going to be a little bit more interesting for both of to Sheshadri, to you, because my questions are going to be more to you. Let say, moment we start talking about AI, the success is much about we need to speak about data and architecture. Without data and architecture, it is very difficult to identify what is AI success over here. So the conversation, because it's more of a model conversation, I would say. Having said that, my question to you would be, Sheshadri. Banks have invested heavily in AI models, but many still struggle with the fragmented data, and the ecosystem is still there, it's not there. Is a real competitive advantage today the AI model itself or the ability to orchestrate trusted enterprise data at scale?
Okay, good question. So today, the stronger competitive advantage is the ability to orchestrate trusted enterprise data at scale, right? So models are becoming more accessible, more and more commoditized, but clean data, context, governance, workflow integration, these are all much harder to replicate, right? So in banking, the institution that can connect intelligence to trusted data and real decisions will create more durable value than the institution that simply has access to powerful models. So this is my thought process.
Excellent, excellent. Because I was looking at the same thing because it's a banks have no started orchestrated data, trusted enterprise data is available. We need to really look at clean data, and that's very, very, very important. And that's what all banks are looking at, and regulators also have been looking, asking only for that. You take any of the regulators, regulators are happy with banks holding a lot of data, but how much of it is a clean data is the question mark that they put across. That's great. That's great. Having asked that, my next question also would be to you, Sesha, on the same piece. Are banks generally modernizing core architecture for AI readiness, or are many institutions still layering AI capabilities on top of legacy ecosystem without addressing fundamental limitations? Because I see a mixed opinion over here from people that I have come across. So I just wanted to ask you, what's your thought on it?
Yeah, you're right. It's mixed across the industry. Both realities exist, right? Some banks are genuinely modernizing for AI readiness, but many are still layering AI on top of legacy ecosystems. So that may create short-term wins, but it also creates limits around speed, cost, auditability, and scale, right? So in my view, the institutions that will lead are those using AI as a catalyst to simplify architecture, strengthen data foundation, and redesign critical workflows. So this will be my thought process on this.
Excellent, excellently put across. Because I have been hearing the same thing from people. A few of my friends from Citi, from all other banks, have been talking about the similar fashion because, and especially from our AI partners from JP Morgan and from Morgan Stanley, we all look at it in a similar fashion. It's a combined effort. It's a mixed pod, which really needs to go hand in hand, and at the same time, with the evolving AI technology, we need to really look at how better we can go ahead with it. Good. Divya, you have any further questions? You can please
Yeah.
take over.
So wonderful thought, and just extending that, Sheshadri, because we are talking about governance and trust, and what we see is that regulators are increasingly scrutinizing, AI-driven decisioning. So, what, according to you, has been the biggest challenge in building trust around explainability and model accountability, both internally or externally?
Right. So, see, the biggest challenge is not technical explainability alone. It is the organizational accountability in whole, right? So, in a bank, trust is built when business, risk, compliance, and technology all understand who owns the model, what data drives outcome, what controls exist, how decisions can be challenged or overridden, right? So, externally and internally, explainability has to be practical, auditable, and proportional to the risk of the use case. So this is how we think about this regulatory kind of scrutinizing AI-driven decision.
Wonderful
Yes.
thought on that one, and definitely I think we all have to look out for that, because banks definitely are not just managing technological risk anymore, right? There's much more. There is reputational risk, regulatory risk, and ethical risk. So a lot of things are coming into picture here. So wonderful. So now I'll move on to Sridhar, and I would uh, like you to, tell me a little bit about, with AI being implemented across banking ecosystems that you have seen, what controls and governance frameworks you believe will become non-negotiable going forward?
Yeah, this is a very critical question, which is just lingering around in the banking industry today, because experimenting with AI is always easy, but scaling AI in a regulated environment is something else. I would say something else altogether. In my view, regulators and auditors, I don't think they are fundamentally resisting AI, but what they are asking for is something more straightforward. Who is accountable? The basic fundamental question on that. Then how is the decision explained? What controls exist? And can the process be reconstructed? So for me, the first foundation is always on data governance, which we touched upon in the earlier question also. A is not only, I would say A is only as good as the data that feeds in. That is a saying, no garbage in, garbage out, or if it is a good input, the good output would come. So A can only be as good as the data that feeds it. So banks need a clear data lineage, quality controls, ownership definitions, access governance, privacy controls, and most importantly, strong discipline around anything which is sensitive financial information. So for the banks, I would say that one of the biggest risks is an highly confident AI output built on poor or fragmented data. That I feel is one of the biggest risks. And so that is something which banks have to consider from a data governance perspective. And the second requirement is on explainability and transparency. Traditional banking controls were always built around, we all know that, documented workflows, rule-based logic, and visible decision trails as well. But AI is disrupting that now. Regulators will increasingly ask now, because of that, why was this customer flagged? Why this transaction is blocked? Why this particular limit is recommended for a client when it comes to some kind of a credit requirement or whatever it is. And most importantly, why an application has been rejected when somebody applies. So banks should be able to provide explainable, I would say, logic, documentation, confidence thresholds, and most importantly, audit trails. But the interesting thing here is the third one, which I'm going to tell now, which is human in the loop governance. Personally, I believe that this is non-negotiable. Since you're talking about the non-negotiability aspect, the human in the loop governance is one of the non-negotiable things for any use cases in areas such as credit, treasury, fraud, AML, collections, or even customer risk. AI should support the judgment and not completely replace it. Banks need clear rules on where, most importantly, the human intervention is mandatory, I would say. Who can override even a model outcome which is coming out of an AI intervention, and who ultimately remains accountable for the whole gamut of things. And the next one I would say is non-negotiable is continuous monitoring and model risk governance. We all know that AI is not static, it keeps evolving day by day, month by month. But the customer behavior changes, fraud behavior changes, economic conditions change, and governance cannot stop at deployment alone now because of that. It requires ongoing validation, retraining the controls which you have already been put, performance benchmarking, bias testing, and even various stress scenarios. But the most important thing, possibly the final one, which I'm thinking of, is on ethical governance.
Mhm.
Increasingly, the question will not only be that does the AI work, but it's not about whether it's AI is working. It is also about is the AI fair? Does it disadvantage certain customer segments? Does it create any exclusion risk? Is there any inherent bias in the system? Is it aligned with the customer rights as well as the regulatory expectations? So overall, if I want to simplify in banking, innovation without governance becomes a systemic risk. So the institutions that will get regulator and auditor confidence, I would say, are not the ones moving recklessly fast. They'll be the ones that combine innovation with strong controls, explainability, human accountability, and most importantly, trust. That's my response.
Very good, sir.
Definitely, definitely, Sridhar, agreeing with you because in our assessment, we believe, governance maturity may ultimately become a competitive differentiator. I mean, the way it's evolving, the way it's maturing, a lot of things going there. But I just want to double click on one of the points because you mentioned human in the loop. So, my question to you is that in highly regulated banking environments, where do you believe human oversight must remain mandatory? So, regardless of how advanced the AI becomes.
Human oversight must always remain mandatory in any decision making that affects customer rights, regulatory compliance, anything linked to a financial risk, or most importantly, on the institutional trust, I would say. For example, areas like credit, AML, fraud, treasury, and even high impact exceptions. AI can always inform the decision, but accountability in banking, I don't think it can be delegated to an algorithm. There has to be a human oversight connect over there.
Wonderful, wonderful. So, for our attendees, very important point that Sridhar has mentioned is the human AI balance. Very important. And while AI can augment intelligence and accelerate decisions, accountability is still something that humans should take responsibility for. So that's very important. Now, uh, a la- our last section is going to be on the future operating models, and Anand has some interesting questions for both of you. Over to you, Anand.
Yes. Yeah, thank you. But at the same time, I would just like to echo your point also on the previous thing, Divya. It is becoming very important in the regulatory front, explainability and creating a trust. Regulators have started asking, where is your data coming from? Where is the trusted source for the data? And that plays a very, very big role over here for any decisions to really come out. And that is where even the human hand would also evolve into, because when it comes to trusted source, you need The data can be from a trusted source. You can get in all the data, but how are we really doing it? Who is really doing the quality check for it? Who is really doing the to make sure that the data is right, if I have to put it. So that is where I would really echo your point and also to Sridhar's point. Moving, and that is where I would really move to the next questions or next set of questions also, which is on future operating model away from this, because human touch can always not be there for continuous time, and that is what, because we need a better quality, we need a quick turnaround time, and we need because me and Shes have worked on many projects where we needed always quick turnaround time. So I would really like to go with that. Uh, sir, a question to you across on this. Do you think AI is augmenting banking operations today? Will change how operation teams are structured and decisions are being made?
Yeah, this is one of the most important question weighing in the minds of everyone. We both know we have worked together in the past in extensive large banking operations. But now I would say that with the coming of AI, it is going to fundamentally change the banking operations. But I do not believe that the future is about operations completely disappearing. But I believe that it will be very much redefined. Instead of it completely disappearing, it will get more redefined now. We have all seen multiple transformation waves in banking operations. We have all seen, even I have seen a lot in my career. We have seen centralization, shared services, core banking changes, global processing models, offshoring, one of the key areas, then workflow tools, and even about a decade back, we were talking a lot about robotics. Every wave changed the cost structures and the process designs of the banks. But AI is very different because it is not only changing the execution, it is also beginning to influence the judgment. We are talking about the human in the loop earlier also, but it is significantly beginning to influence the judgment also. So historically, operations teams are built around process execution, validation, reconciliation, documents checks, transaction handling. We know all of them: exception, processing, maker, checker, etc. So, but now AI is taking over large parts of those kind of things, including on pattern recognition, document interpretation, any anomaly which is surfacing, or flow routing, even most importantly, first level decision support. That means the future operations model will always gradually move from a processing work to managing intelligence, ambiguity, and exceptions. I expect actually because of this operational structures to become a little bit more flatter and more specialized. Fewer people will be spending time on STPs or a straight through work anymore. More people will be working on exception judgment, model supervision, escalation handling, then customer sensitive decisions, control oversight, and even validating any AI assisted outcomes. So decision making process will compress significantly. Earlier, operational decisions mean often moved layer by layer. Like as I was telling earlier, a maker, a checker, your supervisor, then followed by a manager, and even an escalation. You all had a defined escalation matrix in the whole operational decision standpoint. But I think AI is going to now define the context, priority cases, recommend next action, identify the risk signals in real time, etc. I feel that some decisions will become more faster and more distributed. But all the things which I was talking about in the escalation matrices is going to go through a significant change. But this is where I would also add an important caution, I would say. In banking operation, institutional intuition matters. We all know that. So once again, I'm touching upon that human in the loop governance. Experienced people always used to sense a problem before a system could even fully detect it. They sense unusual settlement behavior, a stressed client pattern, an operational inconsistency, a process that looks fine possibly on paper but is beginning to slip in practice. Banks must be careful not to lose this human judgment muscle, I would say. Say, we can put it this way: the future of banking operations is not AI replacing operational thinking. It is actually AI amplifying the operational intelligence.
That's
That's what
that's
I want
really
to say.
that's really good, sir, because I get all your points because I understand from where you come from, and that the very idea of working in nationalized banks within treasury operations, you're bringing that experience also into it. You're bringing your experience working with ABN AMRO into trade finance and into cash management, and also from working with Wipro, working in Wipro in different banks, and what all we have come through by really facing customers and clients and counterparties and everything. So that's really coming on, and that I really feel that is and that is where AI is now featuring across, and it will move it, and people, we have to know. And I would also say that people listening to this conversation, it's just a matter of time that we have to get ourselves moved into AI, and AI is not going to take over completely, but there will still be a lot of places where we need to assist AI in what it's supposed to do and cross judge or cross examine what AI is given out as an output. So there will be a lot of work for as a future model, and AI is just going to assist us but not take over something from us. Having said all that, my next
Yes.
question.
But having said that, just a sort of a caution for people who are possibly after a few years of experience in this kind of an industry, AI is also going to disrupt the operational mechanism, including the fact that unless otherwise we upskill ourselves sensibly
Correct.
enough to meet the challenges of the ecosystem, there is a good chance that we may not survive also.
Very true, sir. Very true. I can sense that also out. But yes, that's a very good statement from a senior person. I would really state, upskilling is very important, and we need to keep ourselves upskilling and cross-skilling always, if we need to really move up the ladder and reach our heights. That's very important. Having said all this, Seshadin, my next question is to you, Akras. Agentic AI. Agentic AI and autonomous decisioning are becoming major industry themes these days. Where do you realistically see agentic workflows creating value in banking without introducing governance risk?
Okay. I see the strongest near-term value for agentic workflows in rules-bounded operational areas where the objective is coordination and execution rather than a fully autonomous judgment, right? So this includes your service operations, onboarding orchestration, fraud, anti-money laundering, AML, investigation support, compliance monitoring, internal employee assistance, and exceptional handling across back office processes, right? So in these areas, agents can gather information, trigger next steps, summarize cases, recommend actions while humans retain the accountability for material decision, as Sridhar sir told, right? So in banking, the safe path is not fully autonomy in high risk decisioning. It is governed autonomy in low to medium risk workflows with clear controls, auditability, escalation paths, and human oversight where it matters most. So typically what we are doing in our world is anything that requires a transaction commit into my backend system, right? It has to go through an human oversight for sure. It may be an agentic AI workflow. It may be a siloed agent, or it may be a copilot, whatever it is, right? So anything that includes transaction commit with make changes into my core banking or backend system will have to go through a human oversight for sure, right? So this is how typically in our world we are designing agentic AI systems.
Awesome. Because that is what is important too at this time, because agentic AI, when we speak itself about agentic AI, most of it at this current scenario is getting into agents, and we are talking about agents across in the bank. So I completely agree. I completely agree to your point. And what Mashrak has been doing is also, I could really see, because with all my friends also, like what we were speaking earlier when during our introduction also, we have got a lot of friends in Mashreq, and how Mashreq is also evolving into being an AI leader in the Middle East. And also, a few of our good clients also are from UAE, and and we could see how UAE is really getting into agentic AI. So I really think yes, is what you have been telling now is the future, and that is really going to bring the change in the agent AI. Thank you, Sesha, for your answers. Over to you, Divya,
Uh,
if you have anything to.
So wonderful. I think both of you shared very, very, interesting insights, which our viewers will love. So to, wind this up, let's go into a quick rapid fire round. We have purposely kept it so a few guidance to our panelists. No thinking too much. Just, tell us what comes to your mind first. One word, one line answers, and no escaping any questions. And the way we'll go it, I have a list of five, six questions. First, Sridhar, you will answer, and then Sheshadri, you will answer. So we'll just go, question by question, and let's see what comes out of this rapid fire discussion. So my first question, all ready, both the panelists?
Sure.
Wonderful. So my first question, we are at a very interesting juncture today. Now, what would you call it? AI hype or real banking transformation?
Actually, the hype is settled down, like any kind of a transformational thing which keeps happening. Hype has settled down definitely. Now we are moving into real transformation.
Yeah,
Great.
it is
Sheshadri.
real transformation, but unevenly distributed. The winners are moving beyond pilots into governed scale. So that's how I will say.
Awesome.
Wonderful. Wonderful. Next question. What's the biggest differentiator today? AI models or trusted enterprise data?
Definitely trusted enterprise data.
Trusted enterprise data, because models can be accessed by many, but trusted context is much harder to replicate.
I think this was very obvious after all
Mhm.
the discussion.
Yes.
Yeah.
Trust is something that we all have talked about enough today for our attendees to take home. Next question. One word. What is the biggest AI risk in banking?
Overconfidence. Yeah, overconfidence, the bank should not get into assuming that AI is going to drastically solve the problem. As I said, the human judgment, intuition, and we all know that everybody has to balance out given the way the industry is evolving and moving very fast. But that doesn't mean that AI is going to solve all the problems. So if the bank is a little bit overconfident that it is going to solve everything, including some of the critical last mile human judgments, that's what I would call it as overconfident. That's where the bank should be more cautious.
One word would be trust. Trust is what is required in AI today.
Yeah. Wonderful, wonderful. I like the sync that's going on.
Yeah.
Um, Next question. Is banking becoming AI native or AI assisted?
Now it is definitely AI assisted, but tomorrow it will start. I would say it will become selectively AI native.
Yeah, that's right. It is AI assisted now, but we are moving towards AI native. It will primarily redefine workflows roles with productivity gains and challenging the shape of work.
Fair
True.
point. What's more dangerous today, ignoring AI or adopting it blindly?
Anything which is some kind of an uncontrolled adoption is dangerous.
Today, banking is largely AI assisted, but the direction is clearly towards selective AI native journey. So that's how I would put it.
Last question on this is what will a truly AI native bank look like by 2030?
I will just simplify it. I would say latest AI intelligence at that point of time, combined with trust, governance, and most importantly, customer empathy. You have to
Mm.
underline the word customer empathy. Finally, that is the key word here. That is not going to change irrespective of any transformation.
Okay, I would say a winning AI-led bank by 2030 will combine trusted data, responsible AI governance, modern architecture, and a workforce that know how to work with AI at scale. So all these four put together into different pillars.
Wonderful. I mean, amazing, answers to all our rapid fire question, amazing answer to all our questions. And that is probably the discussion that's happening in every boardroom today. So very interesting perspectives. Thank you, both of you. And this has been an incredibly insightful session for our audience. Just a quick wind up because today's session has been really great, full of insights. And I think one thing that's clearly come out through our discussion is the future of AI-led banking will not just be defined by models or technology, but what these two gentlemen have said is how banks will effectively combine trusted data, governance, operational transformation, and human judgment. I think these were the themes that came out in today's discussion. And also, perhaps most importantly, institutions who will succeed will be the ones that move beyond isolated AI initiatives and think banking more holistically as an intelligent enterprise. So, thank you everyone for joining us today, and it was truly great having this session. And yeah, looking forward to more discussions and insights in future. Thank you, everyone.